So the most interesting and dynamic developments of the market, global market, is what's going on with the U.S. Treasuries, gold price, and equities. Those three asset classes are typical for diversified portfolios, so interrelations are always interesting and telling to many investors. So a couple of weeks ago, we have started to get into the same situation, a similar situation as it was in the end of May, early June, when U.S. Treasuries started to correct. Gold price was on the down spiral as well. Sharp fall in the gold price, and equities were doing another leg higher. That was in place until a certain moment when investors suddenly realized that the risks are a bit high, and all three assets were actually on the decline. Right now, we're in a similar situation. It was a very good time for the Russian market back then. It's a relatively good time for the Russian market right now, but within, let's say, next week or the following week, we should see a bunch of data, including just coming out preliminary PMIs for the Euro region that suggest that the economic momentum in August is decelerating compared to June, July, and investors may believe that things are not as dynamic as they used to be. That's A. And B, finally, we should see what's going on with the Russian economy as well. In the beginning of September, there will be a bunch of Russia PMIs. On top of that, we must mention the situation with Alexei Navalny, that we've got many questions from the clients, from Russian investors and global investors, very concerned about this development, and also the Belarus crisis that's evolving and unfolding. Again, suggests that there are Russia-specific risks that investors seem to have been ignoring for some time for good reasons, but once in a while they come back on the table. So for the time being, we think tactical, neutral, long-short asset allocation on the Russian stocks is justified, while we are positive on the 6 to 12 month horizon in terms of potential for the Russian stocks to appreciate and see more than 30% upside in dollar terms, including dividends, through the second half of next year.